Welcome back. You're still tuned into Chartbusters. Well, the Sebi at its recent board meeting approved changes to the REIT regulations to create a framework for small and medium real estate investment trusts. These trusts will have a minimum asset value of 50 crore rupees, which compares to 500 crore rupees, which is the current regulation, to make fractional investments in real estate more accessible to investors. To discuss this, how this would really impact the real estate market and investors, we are now joined by Shiv Parekh, the founder of commercial fractional realty ownership platform hBits, and Avinash Rao, the founder of digital real estate exchange Alt Realtech. Gentlemen, thank you so much for joining us and discussing this recent update that has come by. Shiv, let me come to you first up. In simple terms, if you can explain to us, what does this Sebi regulation mean and what does it do to the fractional ownership that people can have in real estate assets?
Yeah, hi. Great to be here. Great to be on. Thanks for inviting me. So I think the Sebi regulation is basically a watershed moment in real estate investing industry. So just to give a little bit of context, you have these grade A commercial real estate assets. If you think of in Mumbai, your properties in BKC or Lower Parel, in Bangalore in ORR, or say in Delhi in Gurgaon, I think the great and very attractive assets to own because you get 8 to 9% rental yield, and along with appreciation, you get a 15% IRR. But historically, these have been restricted to institutional investors or ultra HNIs to own because, as you mentioned, asset values are range from 50 crore, 500 crore, 1,000 crore. So here, with a much smaller ticket size, you're able to get access to this asset class and make the returns associated with owning the asset class. And I think with the Sebi framework, it really gives structure to the overall industry. It builds up investor comfort. And I think it makes it accessible to a much larger audience. Sebi, for instance, has proposed a minimum ticket size of 10 lakh. I think this is great. And even as the chairperson mentioned in the meeting, the minimum ticket size would reduce further as we go along.
It's an interesting, step towards tokenizing real estate ownership and making it more accessible to a lot of people. We also have Avinash Rao, who is the founder of Alt Realtech, the company that runs Alt DRX. Avinash, the question that people have now is about liquidity and taxation. The entry barrier has been reduced because of this tokenization. How liquid are these assets or products, as you would call it? And secondly, what is the tax liability on those who invest in this?
Okay, thank you for having me on your program. It's lovely to be here. You know that real estate assets are chunky, and it's always been that difficult. It's easy to buy, hard to sell. When we have tokenization of real estate, what immediately happens is that the bite size becomes much smaller. So if it is 10 lakhs and if it keeps getting reduced, it's easier to transact these assets. So fundamentally, any platform, any fractional platform or a tokenizational platform allows people to transact at lower bite sizes. Now, that being the case, this is a fantastic step in that direction. What will happen is sooner or later, you will find the secondary market opening up significantly for these assets. And once the secondary market opens up for these assets, somebody who came in and put in 10 lakh rupees can now transact that at either 10 lakhs. And as the bite sizes go smaller, it will get transacted at even lower prices. As we see it, we should allow transactions to happen at per square foot rate. Ultimately, people should be able to own 1 square foot of a commercial or a residential real estate asset. The second question is very pertinent. What are the taxation? What are the laws around taxation? How is it going to be taxed? So there is clear direction when it comes to REITs, how the taxation is. I mean, there have been significant efforts on that front as recently as the last budget, where there was a lot of clarity provided in terms of the large REITs. As we go along, there are digital assets, and there is a taxation norm for digital assets, and there are assets of this nature where people will be holding a fraction of a commercial real estate or a residential real estate. I believe we still need to get some more clarity on that before we can comment. But there is no reason to believe it should be any different from how REITs are taxed. So I think that part should get taken care of. So just the way how REIT taxation works, this should work too.
Okay, all right. The payouts will also be the way REITs are, right? There is a capital appreciation which the investors get, and there are the quarterly, or I would say the periodic payouts that go to them as lease rentals. Am I correct about this understanding, Avinash?
Yes, yes, absolutely. That's how it would be.
Okay.
Obviously, we
Okay.
expect the fine print to come by, but there is no reason for it to be any different from what it is already the case. I mean, the asset size has now become from 500 crores to 50 crores. So that's a big step forward. So we believe everything else also should be very similar.
Okay, get that point. Shiv, coming on this, how big is the market when it comes to fractional ownership of real estate? Are there big players here? Do you see so much money pouring in this particular segment?
No, I think absolutely, Sonal. I think if you look at just from a market perspective, if you just look at the office, real estate office market, there's 800 million square feet of grade A office in India. That's about 8 lakh crore rupees of real estate, 8 lakh crore rupees of real estate in India. Out of which, if you just look at the 3 office REITs, the market cap is about 55,000 crore. Even if a few other players come up with their REITs, that's 1.5, 2 lakh crore. So there's still 6 lakh crore worth of assets where the developers or the investors need an exit. And that's where fractional ownership comes in. There are a few large campuses that go into REITs, but other than that, there's about 6 lakh crore worth of assets that need to be fractionalized. On the flip side, if you look at the investor segment, this is a very attractive product because it's between debt and equity. You get the benefit of debt because you get slightly higher than debt coupon rates, right? 8, 9 odd % coupon rate you get with fractional ownership. But then over and above that, you also get the appreciation that can give you a 15, 18% IRR. And the best part is that because it's a hard asset, your downside risk is really limited. So from an investor perspective, obviously it's a very large ocean, and we are already seeing tremendous amount of investor interest in this asset class.
All right. Thank you so much for joining in, gentlemen. Running out of time, not out of questions, though. Now that we've established the basics of this, we'll perhaps speak at a later date to get to the nitty-gritties and what people should be doing in spaces like this with more players coming in. How would one differentiate from the other? Shiv, Avinash, thank you for joining in. Wish you good luck. With that, we take a short break, come back, get you more on the equity markets and stock-specific action. Stay tuned.